Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Wednesday the 9th of April. I'm going to look at euro dollar now, and as I was writing the morning report, euro started to drift lower. However, it's had a bit of a turnaround since then and it's looking higher once more. But certainly the gains that we saw yesterday have improved the chart, but still we're not going to get all that positive on the medium term, because we're still trading below this 38.19 mark. And whilst that's the case, then I still think that this is a corrective phase that we're in. A series of lower highs that we've been posting, and yesterday's high of 38.11 still is below that 38.19 key high from early April. We're also, as I've pointed out on a couple of occasions, we're also still trading below this the resistance of this 21-day moving average, which at 38.07 currently is just above where we're trading now. So an interesting test is underway. This moving average performed the basis of support through the trend higher in February, turned over and is now performing the basis of resistance. So that's an interesting outlook as well on this. But at the moment, certainly, I'm still thinking that this is just a corrective phase that we're going through. That 38.19 is the key high that we need to stay below. These momentum indicators on the daily chart have admittedly picked up, which is becoming a positive, but I think the RSI still is not all that positive. It needs to really start advancing, and the MACD lines also need to start advancing properly before you'd start to think that this is anything more than just a rally within a correction phase. On the intraday chart, we have broken this downtrend that I had spoken about. I'll click back to there. That downtrend had been intact for couple of weeks actually, and that has now been broken. So that is an improving position. The momentum indicators are more positive than they have been for a while, so that is also interesting. And the other interesting thing about this chart, excuse me, is that we're above, or we rallied above yesterday, the reaction high following or during Mario Draghi's press conference. That was at 38.05, and that does suggest that perhaps the market is thinking that the ECB is not as dovish as perhaps it once thought. But that 38.19 high is the key level. I still think we need to stay below for this chart to remain in this correction phase. However, as I said earlier, the very early move to the downside has been retraced, and it's looking to challenge once more that 38.11 high from yesterday. So a bit of a battle is going on in this euro dollar chart early on today, and as to whether it can break out above that 38.19 mark. If that does happen, then we're up on a way towards that 38.46 mark, and that's 38.46 there, and 38.75, which was the reaction high in March there. So those are the two key levels. If you're going to go for a correction, I think you would certainly be arguing that, let's click through here, that there is a support band around about 37.50 now on this chart. So that's where the support starts to come in. 37.50 to 38.60. Sorry, my maths is wrong. 37.50 to 37.60 are the two supports that come in there. So that would be if we broke below the reaction low of 37.78. So I wish you good luck in your trading on Eurodollar today. Don't forget about the Fed meeting minutes tonight. That could certainly have an impact. If the Fed comes out in its meeting and in its minutes and basically suggests that the committee is not as hawkish as Janet Yellen had alluded to in her press conference a couple of weeks ago, then Eurodollar could once more spike higher. So just watch out for that. Anyway, I'll speak to you later. Thank you.